Hi, I'm Sam Meredith and you're watching Commodities Corner, where we're focusing on wool and the latest pressures affecting the markets. Joining me today is Michael Haverty, Senior Agricultural Economist with the Anderson Centre. So Michael, despite prices easing slightly over the past couple of weeks, they're expected to remain strong overall. How has a wool commodity been able to achieve such growth in the market? And crucially, is this sustainable?
Well, in terms of the wool market prices over the last 12 months, they have increased significantly. And from my perspective, one of the key drivers of that has been the weakness in the Australian dollar, which has decreased by approximately 21% versus the US dollar over the past 12 months. Now, this is significant because Australia accounts for such a significant proportion of the global wool market and particularly exports into China. So as the Australian dollar has weakened, that has meant that Australian wool has become cheaper for international buyers to purchase. And therefore, we're seeing an increase in demand partly as a result of that. Another key factor, again related to Australia, has been that sheep flock numbers have been declining in Australia in the past year. 2014, 2015, we've witnessed a 3% decline, and projections for 2015 to 2016 project another 3% decline. So supply has been limited in key markets such as Australia, and that again is supporting stronger wool prices, which we've experienced recently.
The World Bank is expecting almost all commodity prices to fall this year, though the price of wool increased by just over 19% since this time last summer. So is it possible for the commodity to be an exception to the World Bank's view?
Well, I think wool versus other agricultural commodities such as wheat and corn, there are quite different dynamics that take place between both of them. So in the more mainstream agricultural commodities such as wheat and corn, they're quite close substitutes for each other, and what you see is that trends in wheat, for example, tend to be reflected in other substitute commodities, be it corn, be it barley. So them commodities tend to move more in tandem. Wool, on the other hand, the dynamics of the market are quite different. The substitutes for wool are quite wide-ranging. If you look at wool as a proportion of world fibre production, wool accounts for about 1.5% of global fibre production. So you've got a large array of substitutes ranging from natural fibres across to man-made fibres. So the dynamics in the wool market are quite different. And for that reason, there can be differences in wool market trends versus other agricultural commodities. And then adding exchange rates onto that and the influence of Australia in particular, there is scope for divergence between wool and other agricultural commodities.
Lastly for today, which key indicators will you be looking out for that have the potential to shape the market in the short term?
Well, in the shorter term, I think what's happening in China at the moment and the stock market turmoil which has been experienced in the past month, I think it's important to monitor that closely. The reason for that is that China accounts for close to 80% of Australia's wool exports. And even within that, domestic demand in China is significant. It accounts for about half of Australia's exports into the Chinese market. And this Australia-China relationship is a key influencer on how wool prices globally evolve. So for me, I'll be paying particular attention to the auction market prices in Nanjing in China and how they have been performing. There's been some slight decreases in that recently. I think the impact of the stock market volatility has still to be seen on international markets and how it impacts on the mainstream economy. So that question has still to be played out, but there are some concerns there from my side at this point in time. I would still note that consumer sentiment in China is still relatively strong, but it remains to be seen how that is impacted over the next few months. The other key area that I'll be watching out for is the supply situation within Australia and New Zealand in particular. Past experience has indicated that the impact of El Nino can lead to drought conditions in Australia, which in turn can impact on average fleece size and the overall supply in the Australian market. So them for me will be the two main trends that I'll be watching out for in the coming weeks and months.
Thank you, Michael. Do check back with Dugoscopy for more updates throughout the week. Goodbye for now.